today's topic is UAE corporate tax penalties. It's a difficult topic in terms of obviously, nobody wants to be on the receiving end of penalties. Nobody wants to be the receiving end of fines, and but we must be aware of what they are and what could trigger them. So by doing that, we can, of course, mitigate our risks and ensure that we have the proper processes and controls to ensure that we don't commit any infractions when it comes to this UAE corporate tax law that has now come into effect across the UAE. So just going through the discussion topics, what we have to go through. We'll have a small summary of the UAE corporate tax timeline, and then we'll go into the background behind what it is for penalties under the UAE tax law, why it's important, and we're going to discuss the different types of violations, what could cause these violations. So by that way, you are aware, and then accordingly can ensure that this will not happen. And then we'll give the comparison for corporate tax penalties with VAT penalties, because we, of course, have the VAT law that is already in effect here, and that also has something, can give you a comparison on how it relates to the corporate tax. And then, of course, we're going to have to avoid the corporate tax, avoid these tax penalties. That's the biggest thing. Okay, let's get into it. So, as you can see, there's been a flurry of different legislation that has come in the past year, and now we'll come to the end of this timeline where we are right now. We have the Cabinet decision number 56 of 2023 that came about. This was, we did a webinar on this, determination of a residence person's nexus. So, and then we had in the last days on 29th of July, we had the Cabinet decision number 74, number 75, and 81. So today we're discussing 75, which is the administrative penalties for violations. And but the other ones that sort of came out were for tax the procedures, and you also had one for qualifying investment funds. Okay. So giving you some background on this subject. So the Cabinet decision number 75 has come in for that is applying to the federal decree law number 47, which is the corporate tax law that came into 2022. So we're going to be, and of course, this Cabinet decision was discussing number of administrative penalties and violations on the application of the UAE corporate tax law. So from that, we're going to discuss the following topics. We'll make an in-depth analysis and providing an understanding of these administrative penalties, identify the common violations that may lead to the penalties, and of course, the repercussions that business may face, and then some practical guidance and best practices for corporations and business to ensure that you're complying and thereby just reducing your risk of running afoul for these rules. Okay, so we had Cabinet decision number 40 of 2017. That was, if people will recall, that was just giving you some history on this. That was for the administrative penalties for violation of tax laws. That was, of course, for the VAT, and that was amended in 2021. So the tax procedure law, the VAT laws, and the excise tax laws, that was what we had in the past. Now, this new Cabinet decision that has come out, it is on administrative penalties for the violations related to the application of the UAE corporate tax law. So now you have another sort of piece of legislation that has come in. And it's important to know that the tax violations are independent from each other. So if you are, you may be creating an infraction when it comes to corporate tax law, but you may also be violating the VAT laws. And so they're independent from each other. And this perhaps means that there could be two penalties that you might be occurring. So, of course, someone may be making some type of error or making a mistake with respect to corporate tax, but that may also be something that violates the tax laws with respect to VAT. And of course, there's penalties for that as well. So it may happen, we're not sure yet, but it could be possible that you might be subjected to penalties. And of course, nobody wants to be in that situation. So what is the goal? We need to mitigate the risks of non-compliance. We need to reduce the risk of non-compliance, try to look at contributing factors, pay attention to them, and of course, avoid being in those scenarios. So I'm going to bring in our managing partner, Dr. Kaiser, to discuss the aspect of risk mitigation and with respect to knowing the penalties. So Dr. Kaiser, please, if you can share with us, how can people mitigate their risks with respect to avoiding these penalties?
Good afternoon, everyone. Thank you, Zahid. Thank you. Very good introduction. And I appreciate the way you express the new law, which has come in now in July 29, and which identify ultimately the penalties. Of course, when you have a corporate tax starting from June 23, 1st June 23, now you have to read that and to follow that. And in case that's not been honored or not been applied, then certainly there is going to be administrative penalties. And the organization and the individual to whom is it, you have to see to avoid these penalties by following the rules regulation. This is very important. UAE has a history for tax-free area, and now we have taxation. Although earlier they have taxes on the banks and the oil companies, and then VAT came in 2017. And then you know the heavy penalties they have placed on the companies, and you are aware that so many companies had to be departed because of the heavy penalty. And later, the FTA realized it and they reduced the penalties and came to a reasonable penalty. Now, corporate tax, which is going to starting from June, and now here, the organizations and the individual on this application of penalty is coming, they have to organize. In our opinion, in my opinion, it is benefit to all the business community who's earning income. This is the best way, not an ad hoc way of working before. Now, you have to organize everything and you have to see that your records in order, your income are properly being recorded. You have a proper human resources or staff to take care. But if you do not take care of those things, then you suffer. So in a way, if you are organized, you will be better doing the business and will be successful. But in the way it is done ad hocly, that's completely different. You know the stories, past stories in the UAE, the way the business and who is organized. The difference is the two management. One is the difference of two management. One management can make profit if they are systemized and organized, and the other management cannot. Whatever the fund they have, they will always make losses. So first of all, to understand these penalties which is coming on the individual, business, under tax regulation, by knowing what action can lead to penalties. So you have to see that you should not indulge in such action which goes for penalty. Like for the taxpayer, they can take appropriate measure ensuring that they meet the tax obligation. That's so important. Your staff or the management should understand this to avoid penalty, which is extra strange. This is most important thing for any organization to understand the tax law. And if they do not have proper, then appoint a consultant, tax consultant, that they should go through, organize their record. Their records, they should report monthly or quarterly, and all tax laws are being written there or applied there, and you have better understanding how to handle the corporate tax. Coming to the financial impact, of course, penalty certainly not good for the companies, as unnecessary payment of money and bad name in the market. The penalty will come how? It will come on your taxable income, either in percentage or fixed for the valuation. And that unnecessary adding up is making essential for taxpayer to avoid, to prevent these strains. So again, I will repeat, you have to see the taxable income is reported correctly. Otherwise, there will be a percentage of penalty. Or as per list, they have already announced the penalty list with the quantifying the amount. If you have they can have a fixed amount also on the penalties. So why unnecessary take the bad names? Means when your companies identify that they are violator, so it's not good for the market, for the government, for anyone. It come in the report in the public. So you have to be careful on these things. What are the legal consequences? Of course, tax law is enforced and we all have to honor the business community, who is making money, and we have to honor all the requirement of the law. Penalty can define as fines on interest. Supposing you have you have to have the see that how much fines you will come into it, how much fine you will pay as per the list. Or in case of they will charge if you do not pay, then they will charge just normal any other country that if you do not pay the tax and you pay less tax, we keep on receiving that, okay, you pay. So they will charge heavy interest on that. Bank is charging say 6-7%, they will charge 40% or 30%. So why to pay? Why to pay less? And then afterward they recalculate it and then they have to pay. And then lastly is the criminal problem. You can charge as a criminal, putting a tax lien. That is very serious. That should not happen. It impacts the business, impact the shareholders, impact the creditors, impact everyone. So one to be very, very careful and see that should not come on these consequences of violation. The best thing is to audit preparedness. Audit preparedness will do great work and guidance, and you can be comfortable on that. And when you have already understanding all the records are proper, as I said, if you have the proper human resources, if you have proper system procedure, you have the update procedure, and you have to have it in your office, because every day the new laws are coming and they should prepare accordingly, because if not happen that you make your return on the basis of the old laws, and then you will be in trouble. They don't care. FTA don't care why that you are not aware of the law. They will immediately overdo, or they will penalize you that this is the new law you have not taken accurately, and keep ensure. And if you do the audit, if you review, you have internal audit department, you have all the human resources, what happened? You are comfortable. You know your tax liability. You know how you can attend all this, and you do a good planning and good business on that account. Your costing will be good for business. You know how much the price has gone up. So in this is very important, especially with tax, that after levying of tax of 9%, you should cost your price, that what your business price will be. So accordingly, you pay the taxes on your income, and if it is not wrongly calculated, then the violation comes up. Then it comes reputation and trust. This is a reputation is trust. Like you have an international companies, you can see like XYZ company, so important and so trustworthy in the eyes of the investor, in the eyes of supplier, in the eyes of customer. So they say, no, this is a good company. They never get any violation. They pay tax in time. They have good professional, and that is the trust and confidence. And that way you avoid tax also, avoid penalty also. Avoiding penalty is always be careful. It's not that, okay, you can sort out and pay the penalty afterward. But it's a bad name. then the creditors will not trust that, okay, how other things are they doing it. So it's a time for all the organization to make your organization chart, take the responsibility, give the responsibility to everyone, and work on it so that you are the best company in the eyes in your city, in your country, internationally. This is the time. And you will get benefit out of this. This law corporate talks will, I'm sure, will give benefit to every organization because they are going to do in an organized way the businesses, and they will meet their obligation, meet their tax liabilities accordingly. So then come supposing learning from mistakes. Okay, it happens sometimes. Sometimes you have not read the law. Sometimes you have skipped the law. Sometimes your human resources were not there. They miss it and you got the penalty. That is experience. Many people come across on that mistake on calculating tax amount. But if you have a consultant, he will correctly calculate. It is his responsibility to see everything. He is very much up to date about the tax law. So if you made a mistake, so you will remember, and then in future, that will not happen because that's a lesson for you that this should not happen. And this is a prevent for any future penalty. So learning from mistake is that, and this is happening all over the world, happening when you make something time wrong income and they penalize for some reason, then you will never do that unless until you remember and apply that. Peace of mind. Now, if you are having a very good human resources, all accounts are recorded, records are kept properly on system, accessibility is easy, tax is paid, you attend your investor, your creditors, your customer, regularly attending them, and you are known, so you have a peace of mind. And if you have peace of mind, what is the value of peace of mind? You're doing business, you can think more, you can do more business. If you are always fighting, frustrating that how I can pay less tax, that's not fair. At one day you will pay all your tax, but you have saved it. So my guidance to everyone with all my experience from all the time, that be punctual in paying tax and pay your tax in time and enjoy your life, and thinking time, use your thinking time. So that's from my side. And I can give over to Mr. Zahid. Onward.
Yes, thank you, Dr. Kaiser, for sharing different areas of that factor into risk mitigation and why it's sort of important, and obviously giving everyone different reasons to take importance to these matters and accordingly align their processes and also their people. Our subject, now we're going to go directly into the key aspects of this cabinet decision number 75, and we'll be discussing some of the different violations and the penalties. So what was the decision? It was addressing the administrative fines for the violations relating to the corporate tax law, which is Federal Decree number 47. And it describes how the administrative penalties that will be imposed by the Federal Tax Authority, which now is coming into effect from 1st of August of 2023. So in this, what are the key takeaways? One is that infractions include failing to register for the corporate tax, failing to submit and pay the corporate tax according to the established due within the established dates or within the set of deadlines, and penalties owing to erroneous tax returns and not maintaining appropriate documentation. And also to note that penalties coming from voluntarily, if you have any cases where you're making a voluntary disclosure, there are going to be penalties that will be adjusted. Those amounts have not been given, but we expect, similar to the VAT approach of any type of voluntary compliance that anyone would submit, they would have a different penalty regime for that. And the decision is, of course, has now come into effect from 1st of August 2023. Okay, so let's talk about record maintenance, and this is where I'll bring in my colleague, Mr. Arnold Gani, to discuss what are the different violations, and we'll go through sort of the amounts and what people should be aware of, such that they can avoid. So, yes, Arnold.
Thank you, Mr. Zahir. So, okay, so our first thing that we will be discussing is related to record maintenance. Okay, so I think because of value-added tax, the arrival of value-added tax, the arrival of the excise tax, I think most of the companies in the UAE has already improved their record keeping. Okay, so that's why I think we are already familiar with this type of non-compliance. However, there will be a different rules when it comes to violation of corporate tax in the UAE. So one of them is related to record maintenance. So this is one of the most important, of course, keeping the records when it comes to our compliance to corporate tax law. Okay, so in case of violation related to this, what will happen is that you're gonna have a penalty of 10,000 dirhams, okay, for each violation, okay, and then 20,000 dirhams at each repeated violation. So it means that on the first time that you violate this one, you're gonna have a 10,000, and then you keep on repeating the same thing. It can increase to 20,000 within the 24 months. Okay, so in this case, maybe our next question: what will be our what are the supporting documents that we have to keep? Okay, so in this case, the tax procedure law, by the way, guys, just an update. The executive regulation for the tax procedure law has also been amended. Okay, so we're gonna come up with a webinar discussion on this one. However, it will be very detailed because there are so many things there. So we're gonna do it in the near future. Okay. However, when talking about the accounting records, so we're talking about balance sheet items. Okay, so we have a balance sheet, profit and loss. What are the supporting documents that support those important statements? So we have records of wages and salaries. We also have inventory records and statements. Okay, so it's not limited to these documents, but of course there are many things that in addition to this one. So this is not limited to this list. Okay, and of course fixed asset documents. So we have to keep the records for all those things. Okay, what about documents related to accounting records and commercial books? Okay, that would include correspondence. Okay, your communication with third parties, with your related parties, and also with the authorities. Okay, invoices. Okay, so this one, I think we're familiar with the value-added tax concept. So invoices, licenses, of course, the contracts related to the business. Okay, so all of these are very important documents that are going to keep. And also, as we have mentioned, it's not limited to the documents that we have to keep. It's also related to the computation, okay, or the decisions that we're going to make. For example, election. There will be several elections, of course. I think we have discussed that in the previous webinars. We have election. For example, if you are in a free zone, and then there's an option for you to be subjected to a corporate tax in the mainland, right? So what will be your supporting documents for that particular election, right? So when it comes to record keeping, okay, there's also election for us to if you're doing a cash basis accounting, okay? If you qualify for that, you can do that one, or you can keep on doing your accrual. So what is your decision that leads you to deciding to for a given decision? Of course, it's also important for you to keep all the calculation required, okay, in order for you to arrive at your expenses, okay? Basically, expenses, we can say some of them are actually based on our estimate. So how did you compute that, okay? So it's not only supporting documents like the invoice, LPO, but of course, we have to keep our computation, especially in arrival taxable income, okay?
Yes. All right, Arnold. That's, I think, straightforward. Everyone should be maintaining their documentation, their records. Most companies all have a robust financial reporting system. And of course, they've been preparing since the time of the VAT law inception. So we'd expect most companies to have these things in place. Next, we're looking at documents in Arabic. So what would be the failure? What would happen if you failure to submit any data and records if it was to the authority in Arabic? If you fail to do that? Well, the penalty would be 5,000 dirhams. And then the authority may accept English. However, if they request it must be submitted in Arabic, then you must submit it in Arabic. So this is, of course, you can get most information translated. There's various translation companies available. Do ensure that you work with a reputable one, such that the information that you are disseminating is accurately being translated. Okay, because in the end, the authority may rely on those information, and it is what will be the responsibility of the taxpayer to ensure that it is correct. Then another concept of deregistration. Well, this is some folks will focus on registration, but deregistration also there could be violation if you do not do the deregistration within the time frame. So the penalty is about 1,000 dirhams in case of a late submission of deregistration, and on the same date monthly, but it's up to a maximum of 10,000 dirhams, so that can go up. So your UAE corporate tax deregistration can be found in Article 52 of the Decree Law number 47. And also in decision number 6, it explains the tax deregistration timeline. So in the case of a liquidation, a taxable person must apply to the FTA for corporate tax deregistration. So, and any taxable person, taxable UAE resident person, this is natural or juridical, as defined by the law, may apply for tax deregistration within 3 months of business closure. So it's within 3 months of business closure or dissolution or liquidation or otherwise. So please keep this in mind. Okay. This is administrative. Arnold, if you can tell us about folks who may not inform the FTA or the tax authority regarding any changes in their legal documentation or management.
Okay, so this particular violation is actually common. Okay, most of what we have noticed is that people are not aware of this type of violation, wherein we are not updating the information, okay, provided to the authority. Let's go a little for the value added tax. Of course, you have been registered for the VAT since 2018 or 17, right? So it's been a long time. Okay, so some of those information is no longer updated. So, for example, you change your license. Of course, you're renewing the license, right? Emirates ID is expiring. Okay. We also have power of attorney expiring, or any other legal document that expired. You're changing your addresses. Okay. So in this case, it means that those information is already updated. No. So what we have to do is to keep updating any changes that our company has undertaken, and then update the information to the relevant authorities. So going back to the corporate tax, we also have the same violation wherein the old information you provide to the authority is no longer updated. So in this case, first violation will be 1,000 dirhams. Okay, and then 5,000 in each case of repeated violation. So, okay, as we have mentioned, okay, sometimes articles of incorporation are being amended. Okay, so if this case happens, we also have to amend the information provided to the authority. So this is also what we have noticed also, not updated. And just additional things that we have noted, sharing what our experience is that remember, everyone is actually registered in e-services. Okay, so when we have transitioned to Emirate tax, I think you have noticed that some information are no longer updated. Okay, then of course it's our obligation to update those information on the Emirate tax also.
The next is a violation of failure to notify the FT on a legal representative appointment. This would be perhaps in the case of appointment of a tax agent, and this actually violation would be borne about by the legal representative's own funds. So if they have not notified the tax authority that they have the official legal representative for a company and have not done it in a timely manner, well, that'll be 1,000 dirhams, and we need legal representative should be aware that to ensure that timely and responsible notification to the tax authority, and by responding that the interests are safeguarded and the risk of errors are minimized. So this is with respect to a legal representative appointment. Next is legal representative fails to submit the tax return. Arnold, what would happen in that scenario?
Okay, in some cases, some tax payers cannot do the compliance on themselves. So what happens is that usually they hire a legal representative to do all their tax matters. So in this case, what happens is that if a given entity has assigned a legal representative to file their tax return, and then what happens that the appointed legal representative failed to submit the corporate tax return on behalf of the principal. So the same thing will there will be a penalty related to that. So the penalty will be, by the way, should be taken out from the funds of the legal representative. Because that is their responsibility. So the penalty will be 500 dirhams for each month. Okay, for part thereof for the first 12 months, and then 1,000 dirhams each month. Okay, after the 30th month onwards. Okay, so you're gonna notice that some of the penalty related to this is we can say small, okay, but in some of the penalty, if you remember in value-added tax, some of the penalty are small. However, there's also an implication that it might trigger a tax audit. Okay, so although it is quite small, so in this case, we have to be careful on. In addition to the monetary penalty, there will be other implications, by the way.
Right. Now, in the event that a taxpayer has not registered taxpayer has not submitted a tax return within the time frame, then a penalty shall be imposed the day following the expiry date of the time frame, which is 500 dirhams for each month for the first 12 months, and then 1,000 dirhams each month on the 13th month onwards. Now, penalties will start to accrue from the day immediately following the expiration date. And if, for example, 30th September was the date to file, the deadline, 9 months after at the end of the 9 months since the start of the financial year of 1st of January, then the return was submitted on the 3rd of October. There will be a fixed penalty of 500 dirhams. And of course, there will be similar to the VAT, there may be a variable penalty as well for the late payment. Perhaps an interest charge that may be applied. If you are not settling any tax payable, what would happen in that instance, Arnold?
Okay, so in this case, there will be a monthly penalty of 14% per annum. Okay, so for each month or part thereof. So it can be, what we're gonna do is that there's a possibility of settling the payable, okay, less than 12 months. Okay, for example, there's a delay on settling the penalty into, for example, after 6 months of having it due, or 6 months past the deadline. Okay, so there will be a prorated computation of the 14, because the 14% applies to annual. So we can say that we can note 14% is annual. So in this case, if we're gonna divide 14% into 12 months, so it means we can say there will be a 1.17% approximately per month of delay or the percentage applied. So that's why we have to be careful on by the way. So what we are actually assuming is that the deadline of paying the return will also be the same deadline as you are going to settle the amount payable, just like the value-added tax or the excess tax in this case.
Now, in the event of voluntary disclosure and the tax payable is not settled, then there is a penalty for that. Similarly, it's going to be 14% per year for each month or part thereof on the unsettled amount following the due date. So this is in the case of a voluntary disclosure that is being made, and then the tax payable is not settled. So the due date for the purpose of this penalty, the due date of after submitting a voluntary disclosure is 20 business days from the date of submission of the voluntary disclosure, and or 20 business days from the date of receipt in the case of a tax assessment. Okay, so that's what people should be aware of in the scenario that you submitted a disclosure or you made a tax assessment. Then within 20 business days, you must settle the tax payable amount. What about an incorrect tax return? So if a registrant has submitted an incorrect tax return, what would be the penalty?
Okay.
It's 500 dirhams, and so they can make the correction before the expiry of the deadline. No penalty will be imposed. So do note that before the expiry of the deadline, if you decide to correct your tax return, that's fine. But after the deadline, it will be 500 dirhams. So Arnold, what about if someone has submitted the voluntary disclosure with an underpayment?
Okay, so by the way, voluntary disclosure is one of the remedy that's available to every taxpayers. So in this case, instead of waiting for the authority to find of the error, we can actually submit a voluntary disclosure to correct our own error because we noticed the error. Okay, so the error actually may arise in different occasions. One of them is, of course, filing the return. The other one is actually when you are being assessed by the authority. Okay, so those are, or there's also a possibility that you make a refund. Okay, and then first it turned out that you're over refunding. So in this case, there's also the best way to correct all those things is to file a voluntary disclosure. So if you're gonna look at that, there will be of course before we have mentioned the fixed penalty that relates to that. However, there's also what we call a monthly penalty of 1%. Okay, on the tax difference. So what is the tax difference we're talking about? So if, let's say, for example, we're talking about your tax return. Okay, So for example, you have a payable, let's say 1 million dirhams is your when you file your return. Okay, that's 1 million dirhams payable. Okay, after making a voluntary disclosure, it turned out that you have to pay 1.2 million. So in this case, you have to pay more additional 200,000. So in this case, the difference will be applied on the 1%. Okay, so in case of the tax return, the date following the due date of the relevant tax return. Okay, so it will be computed on that basis. In case of a tax refund, in case of you over refunded, okay, it will be based on the date following the due date the submission of the tax refund application. And of course, when we're talking about assessment or after the tax audit, so it will arise on the date following the due date of the notification of the tax assessment. So by the way, the notification date is the time the authority has communicated to you in a form of notice. Okay, this will be your tax assessment after a given tax audit.
Right. Now, in the case of the failure to submit a voluntary disclosure, so if a tax person it's a failure to submit a voluntary disclosure in relation to errors in the tax return or tax assessment or tax refund, well, a fixed penalty of 15% on the tax difference will be applied. So I'll explain this further. There also is a 1% monthly on the tax difference, either due to counted until the submission of voluntary disclosure or the issuance of the assessment as applicable. So that's the timeline they will use to compute the 1% monthly. Now, explaining this further, there's two penalties involved here. So you're getting a fixed penalty of 15%, which should be imposed on the tax difference, and then a monthly penalty in addition to the fixed one, and that is 1% on the tax. Voluntary disclosure is submitted after a tax audit notification. If someone is submitting this after being notified of a tax audit, the monthly penalty will be imposed from the day after the due date of the relevant tax return and the tax refund application or notification of the tax assessment until the date the voluntary disclosure is submitted. Okay, so yes, multiple penalties over here, so it's better not to end up in these scenarios because then it just racks up and accumulates.
Correct. One thing in addition to that is that, of course, I think what happened here in this case is that, of course, if you notice the error, you have to submit a voluntary disclosure. If you wait until the authority finds out of those things, this will be the consequences of it.
In the case there is a tax auditor or you're going to a tax auditor, if you're not providing support to them, this is another violation. The penalty is 20,000 dirhams. And if you're the tax agent or legal representative or the company itself is not providing necessary cooperation, well, you will get a 20,000 dirham penalty. So that could be in the form of answering the request for documentation. Perhaps they want access to your premises. They may require you to explain certain things or go through your accounting records. You need to facilitate them, otherwise you will end up with a penalty of 20,000 dirhams. Yes, what about submitting a declaration? Arnold.
Okay, so there's what we call a concept of the same rule of submitting a particular declaration. Okay, so remember, when we are submitting our return, okay, there will be some supporting documents that we have to attach. Okay, some of them is termed as a declaration. Okay, so if in case that the authority is asking you to attach or submit a particular declaration, the penalty will be 500 dirhams for each month, okay, or part thereof for the first 12 months, and of course 1,000 dirhams for each month after that. Okay, so we have to explain further what do we call about the declaration. I think you are familiar with the declaration that we're making in case you are in the designated zone when it comes to value-added tax. Okay, when it comes to the usage of particular goods. Okay, which is by default is outside the scope of value-added tax. In corporate tax, it will be different. Okay, so we can explain that further. So declaration is additional information requested by authority. Okay, so there's a particular application to that. The first one is the tax return. Okay, as per article number 53 of the corporate tax law, on the declaration of the exempt person. Okay, so when we're talking about exempt person, there are several exempt person that relates to article number 4 of the corporate tax law. So some of them will require a declaration, okay, wherein they have to declare. Okay, this particular declaration is to be submitted also to the authority as part of the, in this case, what we are expecting, it is part of the tax return, okay, because of article number 53. The other one is the under the transfer pricing law, okay, also related to article number 55 of the corporate tax law. So what is it about? Okay, so when we're talking about transfer pricing, these are the declaration that all the transactions you made with your related parties or connected person. Okay, so in addition to what is required on the corporate tax return, there's also a need for a declaration when it comes to transfer pricing, okay, and also those related to exempt person. Okay, so I think we're gonna be seeing a lot of the declaration, the actual contents, the format. Okay, once everyone is already filing the return, or the guidelines will come up, which will be issued by the authority also.
Right. Thank you, Arnold. Now we're going to get into the comparison of the corporate tax penalties with the VAT penalties. So just quickly going to go through them. So we are comparing the penalties in relation to caveat decision number 75 with caveat decision number 49. And the summary goes as follows. So failure to keep proper records and maintain documents for the first offense is 10,000 dirhams, and repeated violations 20,000 dirhams. That's what we just mentioned. And what is it with VAT? The first offense is 10,000 and 20,000, so it's the same. Remember, as I had mentioned, it may happen that if you are violating one law, and you're violating the other, you may be subject to both penalties. So it's very important to ensure that your compliance is there, such that you don't have these accumulating penalties, and because this could really affect a business's operations. Failure to submit information in Arabic when requested is 5,000 dirhams under the corporate tax law, and then it's under VAT or excise, it is 20,000. So here you're seeing corporate tax law is a bit less. Late deregistration. So if you have not deregistered in time, this is going to be 1,000 in case of a late submission, and up to a maximum of 10,000. With VAT, it is similarly 1,000 in terms of for a late submission, and a maximum of 10,000. And if you're failing to amend information that, as Mr. Arnold mentioned, your various company documents or registration information, then the penalty shall apply 1,000 for each violation and 5,000 in case of a repeated violation within 24 months. And for VAT and excise, it is 5,000 for the first time offense and 10,000 for a repetition. So that's what is being applied. If you're not notifying, if failure to notify the FT on a legal representative appointment, we discussed this. If the tax agent does not notify that they are representing a company, then that is 1,000 dirhams, and under VAT or excise, it is 10,000. And if information has not been submitted, if that legal representative fails to submit the tax return, it's 500 dirhams for each month for the first 12 months, and it's 1,000 for each month from the 13th month onwards. For VAT is 1,000 immediately and 2,000 for repeated violations within the 24 months. Failure to submit the tax return. So that is 500 for each month and 1,000 for 13th month onwards. VAT has 1,000 immediately and 2,000 for repeated violations within 24 months. We went over the fact that there's going to be a monthly penalty of 14% per annum, which computes to about 1.17% for failing to settle any taxable payable. And with the VAT, it is 2% of the unpaid tax, but due on the day following the due date, and 4% monthly after 1 month from the due date, and capped at 300% of the payable amount. If you notice, for the corporate tax, there is no cap on this amount. Arnold, did you want to say anything regarding this?
Yes, actually, that is true. We're trying to look for that, but we haven't seen it so far. So this is very correct on that.
Yeah. Right. So a month, if you have failed to settle any tax payable after a voluntary disclosure or assessment, again, there's a monthly penalty of 14% per annum, computing to 1.17 per month. And for VAT, it is 2% of the unpaid tax and 4% monthly after 1 month from the due date and capped at 300%. So same as previously. An incorrect tax return will result in a 500 dirham penalty with a further clause for any immediate correction. And for VAT is a 1,000 for the first time offense and 2,000 in case of a repetition. Any underpayment, you will have a monthly penalty of 1% on the tax difference, calculated from the due date that it is required to be submitted until the actual submission. And for VAT, the penalty applies on the difference as 5% if submitted within a year, 10% within 2, 20 for 3, and 30% within the 4th year. Failure to submit a voluntary disclosure, that's a fixed penalty of 15% on the tax difference, 1% monthly on the tax difference, either due counted until the submission of the voluntary disclosure or issuance of the assessment as applicable. For VAT, it is a penalty of 50% on the amount of the error, 4% for every month or part of the month of following the unpaid tax to the authority from the due date the payment is due. And if the tax was not returned to the authority due to ineligible refund from the date of the tax refund until the date of receipt of the tax assessment. So this is something regarding refund is also, you could be subject to a penalty. Failing to support a tax auditor with ongoing tax audit, that's 20,000 dirhams. And for VAT, it is the same amount. Okay, just wanted to bring in Dr. Kaiser for the final comments on avoiding the tax penalties before we go into the questions and answers. Just if you have any questions, please put it into the Q&A box and we'll take them up after this last few slides. Yes, Dr. Kaiser. How can we avoid penalties? If you can unmute your microphone, please.
Thank you so much. Thank you so much. I appreciate Mr. Zahir and Arnold guiding so much to all the participants, and it will be run on the Facebook. They can always retry back and understand more all the benefit of this today's webinar. Really, we Alliott Group platform, we are very fortunate that we are having more than 200 offices all over the world, and where we get all the resources and our human resources. And we are very much up to date on everything from the audit law to the tax law or other related things, because we are not only doing the audit, we do the consulting and we do legal affairs all over the world. Coming to the comparison you showed about VAT and corporate, it's really scary, very scary if you have a double tax on that. So with that, I will suggest, and as a tip or whatever you say like that, is that tax planning is so important. Tax planning, if you plan tax, not to pay the right amount of tax. That's the way, and you are ready for the tax. Like if they say the corporate tax is 9%, but in my opinion, it cannot be 9% because when in normal case, when we make the financial statement, which we are making for last decades, it is, you include all the expenses for the finance charges, depreciation, marketing, related party expenses, salary of the owner, it will be added back completely. You have to be careful on that. So for that reason, the tax planning is to be there so that in advance prepare how much is my liability and how much we can attend that. This is the tip I'm trying to give all the business community here, that they should plan before, do the tax planning, or if their accounts department can prepare a projected financial statement for the financial end, so you know where you stand. And if you do not have the resources, then approach any consultant like Alliott. We can prepare the tax planning on that account and we can guide you, and that will be a big peace of mind, because accounting record is a very important subject. It starts with the fixed assets. You should have a proper fixed asset record. It's not like old days that you do not have the record. So what to do, sir? This is the thing, because the depreciation rate is not going to be, there will be change. You can't depreciate all the cars in 3 years anymore, possibly. So the profit will be coming different, or other charges. So there will be tax profit and there will be financial profit. So this is big work has to be done. You can't write off all the receivable. You can't charge all the marketing. So I'm saying tax is saying 9%, but when you start preparing, it will be 20%, because all will be on a different, your income will be more and you will be paying more tax. So what my tip is to keep all this ready in advance. Now, for having, what are the basis of your preparation of account? Your policy should be reviewed. IFRS full or IFRS SME, take note of it. It's your responsibility. How the calculation of income should be correct. Basis of tax, it should be correct. If the application of your accounting standard fails, there will also be incorrect calculation of taxable income, and then you are at fault, not the tax authority. So this, the one I'm stating, or to the management, that they should be careful and start planning and start organizing now at this time. Same is file taxes should be on time. You should file in time, because if you do not file in time, if you delay it, so there's a penalty 100%. So why you go and do the filing and not in time? If you are ready, as I say, if you do the tax planning, you can file in time. There's a deadline, honor the deadline, and avoid late penalties. Have a good tax software, or have a good professional on that account. And another good guidance is that the deadlines or the dates should be kept with you, so you can know that this is on your calendar, that by this date I have to report, and do it in advance, do it 1 month before. So you have a peace of mind on the on this thing. It's very essential to claim deduction, tax credit, and it's all your responsibility. Nothing to do on that. So to determine the deadline, so that's important. Keeping records, of course, as I said, records include the receipts, invoices, supporting documents. Even I say all the accounting record which is in the software should be saved for at least as many years as is required. And respond to notice promptly, means if the tax notice has come, should be attended immediately. should not be ignored or been held back, because then again, it will be hard for you to unnecessary pay extra fund for not attending, because they will penalize you. And in this also, I want to submit to say that maybe when you submit your tax return, maybe it is wrong return, maybe it has not been deducted, but when they will deduct, they will come back to you again. So your peace of mind will not be there. So better do proper thing. Seek professional advice. Always, it is better to hire a tax consultant, qualified tax person, to avoid unnecessary payments, or why to pay extra money, of good earned money, hard earned money on such thing. Take a good advice where you can save the tax. How to, I'm not saying avoid the tax, I'm saying how you properly present it, use the benefit of the tax law. Say now, here, if you these days were related party companies also together in the financial statement, all expenses there. So you have to be careful all this. You have to separate all the companies and have an individual tax return there, unless until you have a joint holding company. All this to be discussed now. Stay informed. Where every morning things are coming. You have to put somebody in charge on that. That please keep on attending these days and this thing what they are announcing, and all the things should be honored the way the tax laws are being changed. Should be immediately attended and see how much benefit you can draw out of that. And similarly, understand the tax law. Understanding the tax law is so important, because how interpret a person interpret differently, one person interpret differently. So you have to have experience, tax consultant who can get benefit. The whole world is working how to pay tax and be peaceful, but not to misreport, and be happy and do good business and plan for new business. Thank you very much for listening. And I'm sure Alliott is there to look for all your challenges and all your requirements. Thank you very much. And thank you, Mr. Zahir, and thank you, Mr. Arnold, for this great webinar and informative for all the listeners.
Yes, thank you, Dr. Kaiser. We have concluded our presentation slides, so we have a bit of time. I know we've gone a bit over our allotment, but if you could stay with us, we'll answer a few questions that have come up. We have the question from Mr. Amir. Thanks for joining us, Amir. What is the deadline to avoid wrong submission of tax return to avoid the 500 penalty? Well, Amir, the deadline will depend on when your financial year ends. So depending on the end of your financial year, it will be 9 months from then. So 9 months would be to submit and pay the corporate tax payable and submit the corporate tax return. Next question is from Sheila. Sheila asks, is there a specific document to be submitted to the government that we need to maintain related to transfer pricing transactions? Yes, Arnold. The quick answer is yes, Sheila.
Yes,
So,
we have. Yeah. So there are two things relates to the documentation. There's a master file and the local file. Okay, so those are you have to maintain.
yeah. So you must maintain, and of course, if you need assistance on building your transfer pricing documentation and policy by which you will be doing your record keeping, we can provide assistance on that. Okay. Question has come in. She says, is the government going to provide us a template?
Okay. So by the way, I think if you have seen, I think everyone's seen about what is listed on the transfer pricing rules. So they have mentioned, okay, that of course there will be a methodology on we can use. Okay, after that, of course, there's no more detailed explanation on those things. So what we are expecting in the future, there will be more guidelines, clarification that will be coming up in terms of the transfer pricing law in the UAE.
All right. The question is, in failure to amend information with the authority, for example, a company has not yet updated renewed license in the FTA portal, how many months until the penalty will be imposed? Is it imposed? Is it an immediate penalty, like just after 1 day after license Friday, or is there a grace period that you can update information? Is the same for renewed Emirates ID and passports of the owners? So short answer is yes, regarding it's all your documentation by which you've submitted on the portal, that all has to be updated. Please make sure you have the dates, expiry dates, and you're aware that, put them in your calendar. And of course, if you have had any changes in your legal structure, you must also update that on the FTA portal. Yeah. So the question on timeline on that.
Yeah, on the timeline, it's better not get caught off guard. Okay, so the moment you notice that it's actually you're gonna notice that if authorized signatories, okay, the partners are renewing their passport, it means that the information has to be updated in the portal. Okay, so that one will indicate. So as for the timeline, there's no definite timeline, but it's better that update those things whenever you are renewing the documents.
Question from Precious. We have 3 companies, 2 of them are not VAT registered. For corporate tax registration, shall we register them as a group?
Okay, so good question. So the best way for you to do that is to come up with an impact assessment, because there will be so many advantages of being in a tax group also. However, there is also, we can say, some disadvantages, of course. However, the first thing you have to know is that are you qualified to do a tax group when it comes to corporate tax? So that's the main question first. Okay, given the information, limited information in this one, of course, the only way you can find out is to come up with an impact assessment.
How to amend in the portal? We can assist you if you need. You can write to us and we can assist with the amendment, but most likely it's pretty straightforward. You go onto the portal and you remove the old documents and you upload the new ones.
Yes. By the way, the best way also to do that is when you're doing your corporate tax registration. So if you notice that some information are not updated, so that's the best time also to do that.
Yeah.
So for our case, we also do that one. Okay.
Great. Okay, I think we don't have any more questions. I think something else has come up. No, thanks. Thanks so much, everybody, for joining us. I think we'll conclude the webinar here. We look forward to seeing you at the next one. Do share with us your feedback and do let us know what are the topics you would like us to cover for the future. We'll be bringing to you more webinars in future, and we'll be discussing this topic of corporate tax, but as well as others. So thank you for your time and wish you all the best. And yes, see you soon.
Yes. Before of course, one last word from my part is that, of course, for those who are not aware, Alliott is also a registered tax agent with FTA. So if you have some information, if you need us to support you with representing you as a tax agent, feel free to come to us. Thank you very much.
Thank you, everybody. Bye. All the best.